By June 2025, Bangladesh's banking sector had reached a breaking point. NPLs climbed to 27.09% of the total loans, and the 5 troubled banks headed for merger carried NPL ratios between 48 to 97%. When we include written off, rescheduled, and court-struck loans, distressed assets amount to nearly 45% of the entire loan portfolio. In such a fragile and tilted situation, stabilizing the banking system has become a major challenge, not just for the interim government, but also for the next government in power. You might have questions that what can government do to make sure that it doesn't happen ever again. Bangladesh recently released the first Bank Resolution Ordinance 2025, which is a timely and essential step to bring control, structure, and discipline the banking failures. I'm Kashfia Binte Hassan, an analyst at Lion City Advisory, and today we'll break down what's the waterfall structure for liquidating banks, how to improve the system, and also what opportunities it creates for the banks, investors, and policymakers. Let's start with who will get their claims met and in what order. In liquidation under the Bank Resolution Ordinance 2025, firstly, the secured creditors are going to be paid first from the proceeds of their collateral. Secondly, resolution and administrative expenses are settled next, which means any kind of cost regarding lawyer or just for the liquidation will be paid. Thirdly, there's insured depositors who are covered and paid full up to the insured limit. Fourthly, there's uninsured depositors who will be getting the amount only on the remaining asset. Fifth, there's senior unsecured creditors who are paid after all deposit claims are met. Sixth, there's subordinated debt is honored only after all senior liabilities have been paid. Seventh, there's 81 capital instruments which absorb the losses next. And lastly, the equity holders are going to recover only if all other prior claims have been satisfied. So, what's the framework and how is banks going to handle it, or the government is going to make sure that banks can handle the situation? Bangladesh's banking sector has faced mounting challenges: high non-performing loans, capital shortfalls, and weak governance in several institutions. Until now, there was no structured mechanism to resolve troubled banks without risking the contagion or burdening the taxpayers. The Bank Resolution Ordinance 2025 changes the fact from the very beginning of the structure. Firstly, it establishes a dedicated Bank Resolution Authority or BRRD, an independent body under the Bangladesh Bank, which means it has clear power to intervene early, restructure, and even wind down a failing bank efficiently. So, what does the new framework introduce in the new system of it? Firstly, there's early intervention, which means BRRD can now step in at the first sign of stress, forcing corrective actions, capital restoration, or management changes before even a collapse ever happens. Secondly, there's modern resolutionary tools as well. There's Bridge Bank to keep essential operations of the bank constantly running. Secondly, there's bail-in, so losses fall on shareholders or creditors, not the taxpayers. Next, there's also P&A to shift the good assets to healthy banks and isolate the bad assets. Thirdly, there's Financial Stability Fund, which means a dedicated bank-funded pool to cover resolution costs without burdening the public. There's also coordination and oversight. BRRD works with Ministry of Finance, BSEC, and also regulators closely to monitor systematic banks and streamline resolution for the smaller ones. Next, there's legal protection and transparency also. Resolution officers get good faith immunity, and institutions must provide full post-resolution reporting to ensure the accountability of theirs. In essence, this law brings Bangladesh in line with international frameworks like the EU Bank Recovery and Resolution Directive and the FSB Key Attributes, ensuring stability, discipline, and protection of all the depositors. At Lion City Advisory, we see this ordinance as an opportunity to strengthen the resilience of Bangladesh's financial system, and we support the institutions through various methods. Firstly, we conduct stress testing and resolution planning for you, which will be including living wills and early warning frameworks aligned with the global standards. Secondly, we can also help you with asset quality review and diagnostics, assessing true NPL exposure, capital gaps, and restructuring needs of the particular banks. Thirdly, there's also special asset and distressed equity management system for ours as well. Managing the bad loans, recapitalizing weak banks, and stabilizing the governance can also be done by us. Fourthly, there's mergers, valuation, and exchange ratio modeling, which will be needed for the liquidation procedures. And in that, we can also enable bridge bank mergers, PNS transactions, and sector-wide consolidation. Fifthly, there's capital structuring, legal, and tax support that we can offer you. We'll design hybrid or bail-in instruments and ensure smooth, compliant resolution execution. The Bank Resolution Ordinance 2025 marks a turning point, a shift from reactive bailouts to structured, market-driven stability. And at Lion City Advisory, we are going to help you build the institutions and also navigate this transition and build a safer, more sustainable banking future for the Bangladesh. For any kind of queries, please feel free to reach us. Thank you so very much.